Good morning, everybody. This is the professor. Today we got a real treat. It's free indicator day, and you're going to get an indicator that is unbelievable. It's going to read level 2 for you on your chart that you're trading, and it's being used as a training method for prop firms. So it's amazingly helpful for beginner traders and intermediate traders before you have fully learned how to use level 2. Also, I'm going to go into some serious detail about level 2 that you've probably never heard anyplace else, because most of the other traders you see online just don't talk about it because they don't know about it. I've been trading with hedge fund manager, million-dollar funded traders for years now, and I bring a particular set of skills to my trading. So if you do not watch the entire video, I will find you and I will kill you.
Welcome to Day Trading for Success, where the professor, a former math teacher turned full-time trader and coder, guides beginners on how to trade for a living using proven strategies, breakthrough indicators, and lessons from essential trading books. The professor isn't a licensed financial advisor. Always consult a pro before diving into any strategies or demos you see here. Start smart, practice in a simulator, stick to a solid day trading plan, and don't forget to log every trade. Your profits will start with preparation. Thank you for allowing us to share in your journey. Please remember to subscribe, comment, give a thumbs up, and click that notification bell so you can be the first to receive more of our great content.
So I've changed the screen a bit so you can see if you're new to trading or using level 2. First, if you don't use level 2, this is what you're going to see on your trading platform, whether it be on your phone with Robinhood or another platform, or if you're trading on your desktop and you don't make level 2 available, you're just going to see the current ask and the current bid and ask right here, and an exchange, and then the number of shares, and you would multiply this by 100. Before we go any further, a lot of people ask how this looks this way on Thinkorswim. This is the Thinkorswim platform, this color scheme here, and this is the TOS old school under look and feel. It makes everything dark. Obviously you fill in these squares, but you get this look that's a little easier to read if you like to trade on dark screens. So let's go over what's really here that you're seeing before you get into real level 2, which is the depth. I'm going to pull this down and open it up, and you're going to see a lot more information. But if you're not paying for level 2, or it's not available, or you're not used to scalping or day trading, you're probably only seeing, you're just jumping in at a price that you want. The spread between these two prices, meaning the difference, might be a lot more money than just a penny or two like it is here on NVIDIA. So, you might say, hey, I'll wait till it gets to my price, and you might put that price in and wait. It might not ever get there, so you have to, think about that. But this is what you see, and we'll go into more detail if that was confusing for you. So what are you looking at here? This is the exchange that's going to end up putting through the buy or sell for you. Okay, so it's saying, right, the EX means exchange, right? This is the price that you can go in at if you want, right here or right here. So you can bid this much to get the stock, or if you're selling the stock, you're asking this much over here. And then these are the shares here. So now keep in mind on Thinkorswim, you always are multiplying that number by 100. So when you see a 3, that's really 300. And so keep that in mind. So this is the same information on both sides. And then up here, it has those prices, and it will have the spread up here between the two, which is right here, the percentage of the spread right there. And then it has the overall price here going back and forth up here. Another way to look at it, ask and bid, and then a bunch of other information you might be interested in. So usually when you're just taking trades for a week, a month, a year, you don't need any other information. You're probably doing it, in this case, you're probably doing it right on Charles Schwab. You don't even open up this platform. But if you're day trading, right, and having additional information on what they call the book, and seeing all the people that are waiting, and we drag this down, you're going to get information like this. It's going to show the number of shares waiting at different prices to be either bought or sold. Now, this is really important information if you're day trading or scalping, because you want to see, you might want to wait to get to the better price where a lot of people are waiting, or you might want to get out at a price before it stalls where lots of people are waiting. This is 1,100 shares right here at that price, $144.20. That might be enough to briefly stall the stock and turn it in another direction. Probably not, because this is NVIDIA and you're getting massive amounts. There's a 15 that just went by, massive amounts. But that's why it's important, because these numbers and these prices further down can affect when you're day trading, when to get in and when to get out. So knowing level 2 information is very important. So let's go over a little bit more about how this works, right? So if you were to do a market order, right, this is the price that the market maker is going to give you. It's usually right in between the spread is what it is right here. So now if you were to bid and you got it, what happens is you bid, you say you buy the stock, and it travels over, picture an imaginary bridge here that connect these two. And as it's going over the bridge, there's a toll booth. And in that toll booth, right, they're going to charge a fee to make the connection. And it's hidden fees. You don't see it. So it's usually a penny or a fraction of a penny on every share. So if it was 100 shares, you might be paying 10 cents. It just depends on what the spread is between the differences between the two. But the market maker, that's how they make their money. They're going to make money when it goes, or if it goes this way. It's the same thing. And you need to look at this sort of like an auction when you're trading. This is somebody bidding. I'm bidding this much for a product, right? And over there, the auctioneers go and say, well, no, I need this much. Do I hear any more? Can I get more? And that's just how simple it is, right? The auctioneer's saying, I need this price, and the buyer's saying, the bid's saying, no, I'm only going to this price. Going once, going twice, going sold at the lower price. And that's basically, to simplify it, how that works very, very, very quickly. And then over here, there's the different exchanges that sale went through, okay? Now, as I go on with information here, there's going to be a lot of information that's going to get more and more complicated for those people that are trading against high-frequency algorithms and are really trying to get in and out with hotkeys. And I'm going to have a lot of information that's going to blow their mind that they probably don't know about. And then I'm going to just start at the beginning, and we're going to kind of tier this. And then eventually at the end, I'm going to give you a free script for at least 48 hours. It's only going to be available for 48 hours. And then it's going to go off to the prop firm that contracted it. And then you can most likely buy that script for a small amount of money. So hopefully you're going to get it here. But on that script, it's really a revolutionary type script, because what prop firms were looking for is they get new traders in. And typically a lot of prop firms are saying that if you can't read level 2, they don't even want you. And that's a funded account, like somebody else is funding your account to trade, and they're taking a percentage of what you make. And that's what a prop firm is. And that's all kinds of deals, and you need to look into that on your own if you're interested. If you don't have enough money, but you want to trade and you want to be funded. So typically to day trade or scalp, you need to have a $25,000 minimum in your account in the United States, and then you can get on margin, and you'll be able to trade up to $100,000 in value. So everybody's working toward that 25K, where they can then trade on their own without being funded. But even if they are funded, do get there, they may want to be funded and trade with even higher amounts of money. So there's lots of reasons that you might want to get funded. And usually, in order to get funded, a couple things have to happen. You have to be trading a winning strategy and prove it to them. Hey, I've made this, even if it's $10 a day, I've consistently made $10 a day based on this knowledge I have. That's going to get them to look at you going, wow, that could be $1,000 a day if we gave them the money. So that's why they look at you like, and I can make 10, 20, 30, 40, 50% of that. You want to try to get a good deal, but and then I'm going to take a chance on you. I'm going to risk my money on you because you've proven to me you have a winning strategy. Now, a lot of prop firms will not even let you use charts to see how good you are, and they will say trade on the level 2 alone. Show me you can make money just looking at these numbers. All right, now that's pretty extreme, but if you can, you are somebody they want to invest in. So that's why a lot of people want to learn level 2, because not only will it help you make money on your own, but it will prove to whoever wants to invest in you, man, this person really knows what they're doing. So that's one of the reasons that you'd want to think about that. So if you can't quite get that, but you have a strategy that you can prove to them that you are able to, I'm going into this detail to tell you one important fact, because you don't need to go to a prop firm to be a successful trader. But let's just say you want to be, and you can prove in your financials, I've made this much money, but I still can't master level 2. Will they just reject you? No, they will not. There's just certain firms that just absolutely require that you have to be that good, because they know they got a winning horse here, you know. But just say you have trouble and you just can't seem to get the timing down right. You just can't seem to read the signals right. When do I go in? When do I get out? Right? What do you do then? They still want you because you've proven it, but they really want you to learn level 2, because then you'll make them more money. So I was contracted to develop an indicator to help traders do that very thing. And this indicator that will be available for free now for a few days, but then you can still get it, I'm sure, over at the $1 Million Margin Club, who does all these things for the prop firms. You'll be able to get it over there, and it's going to show you when to go in and when to go out of level 2 right on your chart. So you don't want to miss it. If you do miss it, you want to get it anyway if you think level 2 is the key to your trading success. And it is for a lot of people. So you should definitely check it out. And really, it's even if you miss it here, it's short money, guys. I think it's like $25 they sell all their indicators, because usually one trade, you've made that money, and then you have it forever, you know. So, but if you can read level 2, you don't need it. You know, that's not for people who are really good at reading level 2. So we're kind of lucky right now. They've changed the pricing a little bit for when you're trading on the bid and the ask. Now, keep in mind, Thinkorswim does not charge for trading fees, but there could be some fees. There will be fees, like I just talked about, with the toll booth in the middle when you're using market. And this is a little bit more difficult to understand, so you might want to play this back, but this is where a lot of people get tripped up. So if you're adding liquidity to the market, you're not going to get charged a fee for that. But if you're taking it away, liquidity, then you're going to get charged. So what is liquidity? So picture you're in a grocery store or a hardware store, and you see a lot of products on the shelves. If you come in and you're taking a product off, you're taking away something they can sell. They're losing liquidity of those products. They no longer have them there. So it's really that simple. Whenever you take something away, you're taking liquidity away from the market. There's less things for traders to see. When you add something to that shelf, then it's like, wow, you're giving everybody a better chance to find new products. You know, so that's when you add liquidity, when you put something there. So how does that work on the bid and the ask? So when you buy at a bid, you're willing to wait. You put a price in down here, you're willing to wait for that price to be met. That's adding something to the shelf. That's adding liquidity. It's going to sit there and wait. You know, might be only wait a split second, but I mean, that's the idea. You're adding something there. And it's the same way when you're selling at the ask. So you want to sell something over here, then you put this number, like, I want to make sure that I get this much, and I'm going to add it to the shelf till somebody is willing to pay that much. In this case, it's the book, not the shelf, but you're adding to it. And level 2 is basically look at level 2 as and time and sales, which is after the transaction has been made, as the book, technically. So level 2 is the depth, time and sales being sort of what happened as the book. So that's the difference now. Now, if you were to just sell at the bid price, then you're not adding liquidity, okay? Or if you were to buy at the ask price, you're not adding liquidity. You're instantly taking it off the shelf. And a lot of traders don't want to mess around and wait for it to get to their price. They want to get into the action, especially if you're a level 2 trader. That means you're probably scalping or you're probably doing market. So that's an important distinction to understand. And we'll get into the fees here, other fees here in just a sec. So, I mean, just to clarify, because I might have been confusing there, because often I'll have a time and sales tape next to the level 2. Technically, level 2 is the book, the depth of the market. Time and sales is the tape. I kind of look at them as the same thing because you get to see right next to it. This isn't a video about time and sales, but you would see the time and sales right next to it. But let's just go ahead, since I made that more confusing than it has to be, let's go ahead and add a time and sales over here so you get the idea of what I'm talking about here. We'll take off the level 2. So this is after the transactions have been made here. And let me just get this here. So you can now see what time, what the price was, and how many shares went through. And I'm going to get into something that a lot of traders don't know in just a minute. And if you're semi-professional or intermediate and you think you know and that what I'm about to say, you might want to stop and listen to me because it is information that is not, when I mentioned at the beginning of the video that I trade with million-dollar traders and hedge funds and a lot of traders that trade huge amounts of money. You're going to want to know what I have to say because most of you listening probably do not trade the share size or in the group size that I trade in. And how does that affect level 2 and time and sales? This is important information to know, especially if you're crossing that threshold into professional, you're maybe getting into a prop firm. They're going to tell you a lot of this stuff when you get there, but why not know it ahead of time? So that's important stuff to know. But I wanted to clarify that one fact because I made it more confusing than it had to be. So book, tape. Okay, guys? So let's get into talk about these. I had mentioned earlier on that it's good news. Some changes have been made about the fees. So I talked about how you pay the toll on the bridge, and I talk about how you might pay if you're taking away liquidity. How you pay for that on Thinkorswim, for instance, is they will give you the worst spread for whatever direction you're going, and that's how they make their money. That's how you pay for that. So if you often wonder, like, God, it didn't give me a good deal at all. So if you're trading with a 20-cent spread and you don't add liquidity, that's not good for you. So you have to think about that. Now, there are ways around that. Okay, it's not for everybody, but if you really are a high volume trader and trade millions of shares on a regular basis, they can adjust that for you. You have to have a rep for you. You have to say, hey, man, whatever you say. And then they will sometimes give you sort of a rebate based on that spread, or you may not trade with them anymore because you're getting the raw end of the deal all the time. But somewhere they're going to make some money because they're going to have to pay money too when you're not adding liquidity. But you might not have to pay the full spread if you make a deal. But I can tell you that's a difficult thing to achieve, to have them make a deal. So you want to try to avoid it. You want to try to have trade market or have limited spreads unless you're going to add liquidity on a regular basis, because it will catch up with you with some pretty big fees. And most of those fees are hidden. This would be hidden and then reconciled. So on May 14th of this year, all the FINRA and all the exchanges changed the rate that they charged you. So people would say to me here, like, I just got charged all this money and you said Thinkorswim is free. Thinkorswim is free, but you still get charged by the market, by FINRA, by, through the SEC. You're getting charged for every trade you make. And it didn't used to be that way, but for a few years now, it was basically $27.80 you got charged per $1 million of value that you traded. So for most people, that's not very much. But if you're trading 300 scalps in a day on a $200 stock, well, that's going to add up pretty quick. So you better be making some money, or in the priorly, or you were going to be charged $27.80 per million. And I know I definitely felt that, but I made money, but I definitely saw those fees come in because I did trade that many shares. So, to me, you just have to work it in, right? But now, May 14th, 2025, they've changed that. They've taken that away. Effectively, that's gone down to zero. So they say zero. Not really. Now what they're doing is, depending on what trades you take, what broker you have, a whole bunch of different stuff, they kind of adopted the whole Charles Schwab attitude, which was they bury what they're making right inside, and it gets reconciled immediately in your trades. And what does that mean? That means that you're getting charged fractions of a cent and an average of $5 to $10 per million now as of May 14th of this year. So that's the reality of what's going on. If you're having trouble understanding what are these fees, no matter where you are, the exchange is going to charge you, no matter where you're trading. So the platform's still free. They just make their money off of trades, off of how you trade. And every platform has a different little shtick that they do that charges you that money. So, always keep that in mind. Hey everybody, I hope you're enjoying the video so far. I wanted to show you a couple of tricks a lot of people don't know about. When you're on my channel, whether it be a desktop or on your phone, basically when you open any video, you're going to want to go down to more down here and click that. Now, if it's on a phone, you have to click more one more time. They give you another little option. But down here is where all the links are for all the stuff that I'm talking about, and that just makes it a lot easier to find them. Remember, when you're downloading a free layout, you have to highlight, right, left click copy, go into your setup on the Thinkorswim platform, the upper right corner, and then get into import or share item, and then push Control V in that box, and that layout will populate in there. And the same thing for the free custom scripts that I give away here from time to time and are on a lot of episodes. But these you have to click on, and they will take you over to the $1 Million Margin Club or to Amazon to purchase the books. And then when you go to the $1 Million Margin Club, this is what their website looks like. Here's a little secret you might not know about them, is basically they have a review for all those books that goes page by page. So there's Day Trading Volume 3, there's Trading in the Zone, Day Trading Volume 1, Day Trading Volume 2. So they're a book review YouTube channel, and they're starting to do the reviews of all the custom indicators so you can learn how to use them, also how to load all these things. And I know they're about to put out Day Trading Volume 4, and sometimes a lot of people just learn visually, by listening more than visually. So now you can look at the books and you can get the visual cues, as well as if you're out of the country and you can't get Amazon for some reason, this is another way to get it, guys. So just wanted to make sure you understood that. Thanks for following the channel and subscribing, and keep enjoying the video. So one of the things I didn't mention when we were talking about what happens here, that only part of this is shown, is I didn't mention spoofing. A lot of times traders will spoofers will put in large amounts here, and then right when effectively trying to change the direction of the stock. They're trying to manipulate the stock, and they're far worse than front runners, in my opinion. They basically will put it there and then pull it off because they don't want their shares to be filled, depending on where they are. And that's called spoofing. So that's something else. Most traders that trade a lot know about that, know to watch for that, because they keep seeing a number go in and then pop off right when before it gets to it. Then they're trying to not have that sale go through, but scare people into a certain direction or manipulate them into a certain direction. Okay, guys, so let's get into the new indicator, and here it is, and I'm going to explain to you about how it works and how dynamic it really is. So first, if you went to, you watched the video that had showed you how to build custom scanners. I offer the scanners for free, so just go back a few videos and you'll get them already two different scanners that are based off the top traders out there. I won't mention their names, that have 1 million subscribers and sell you scanners. and you have to pay a fee. Well, this is the same settings. You know, this is the same thing. So if you get the two different ones that I custom coded, because I'm a coder, you can get these. Thinkorswim offers the exact same thing. So right now I can see the stock that I was trading up there has dropped off. Let me get to this. Isn't actually one of the ones that are, let me load the professor's custom ones here. So this is, let me load the 35. So this is one of the ones that you get. This will probably have the stock, right? Yeah, that's the stock I had right open. So that other one was set for, I think, mid cap or small cap. It's the one that just came up, but this is the one you want. And I have another custom thing you get with it that's over here that shows you what the last high was, the percentage from the high. And then, but basically it's the formulas inside here that I show you how to get them. And they're in the, if you get it, you just download it for free. So make sure you do that. This is the first thing you're going to want to do if you're trying to scalp, is you're going to try to find a stock that's really moving. So look at the volume here still. And you know, you always want to have on here, this is a lot of the things. I set mine up differently and I showed you how to do it, whether it's hard to borrow or not, and a bunch of different stuff. So I'm not going to show you how to do a whole scanner thing here, but this is how you can find the stocks. Is this the first thing? Go to that one that gives you those away for free, and then you can, if you're paying for a service, you don't have to pay for it anymore. So now this is this is one of the ones that that everybody was trading this morning. Now we're in a really bad time of day for this, so it's not really moving too much now, but it's possible that it will move while we're talking about this. So since you're not going to get the share size over here on a chart, there's no way Thinkorswim allows you to do that. That's why they thought nobody could ever develop an indicator that duplicates what you see here, but someone did, and it's right here for you free today. And I was contracted to do it, and I did it. So let's talk about how it works. First of all, the most important thing to get a mover is you want to have the previous volume and then the volume of the newest candle. So when this volume increases from that volume, this turns blue, and there's an alert like, hey, something's happening. And the labels that you don't see up right now because the stock is moving, see that black spot right there? That's basically saying nothing's happening, or it's an absorption. There we go. So I don't know why that didn't light up right there, but this is warning you. Well, let me not. So there's what I just talked about, how the volume's just spiked, and then it showed it here. And then this is the signal that you wanted to go short off of that spike. So what happened here, what was going on here is, why those things happened is, if the volume went up and the price didn't move, it was just like buy, sell, buy right there, and it just didn't move. The share sizes were keeping up with it, right? It's not moving. So it's winding up. It's winding up because on one side or the other, they're going to get filled and then it's going to pop. And that's how traders read level 2. They're looking for it to wind up, volume go up, price not moving, and then wait to jump in. Now this is really thickly traded right now and just a penny apart, so it's not going to make the moves that we want. So here's the signals waiting. Now when the volume goes up and the price doesn't move, it's called absorbing. It's absorbing it, and that's a term you don't hear a lot of, that scalpers that read level 2 use. They'll yell out in the room, it's absorbing. You hear it's going absorbing, and everybody's like, get ready. Because once that absorption stops, there's a spring, one way or the other. So you're getting, what I would recommend is, if you're using this, and it's telling you right there, the bid, the ask, the spread. If you're using this and it goes to the signal absorbing comes up, look over here and see which side. So you know whether to go long or short. You're going to want to make sure you understand. So signal absorbing, volume just went up. Price isn't moving, it's absorbing. So you still have a lot of time left on this one candle to think about, like, is this going to pop, right? So it's absorbing. Now, it's not a great example because there's barely any shares right here. But the volume went up, so people are wanting this to move, but let's just see It's not saying breakdown yet. It has to move, and then you'll see a signal. Either go short or go long. And now you're ready. You're sitting on your hotkeys. You're like, where's it going? And you know which way to go because you know where the higher amount is that's being absorbed over here. And there it goes. So it was a breakdown, and it went down. See how that worked? You were ready, and you caught that. You would have seen the share number over here. So you would have caught that. And that's how unbelievable this indicator is, right? You don't have to understand level 2 anymore. Just do what it says, absorbing, waiting, breakdown, go, boom. And you got to be fast, but that's how scalpers work. They're fast. Now, all those people that have been struggling so long to read level 2, now it's telling you. And it also gives you an alert and an arrow that it was about to break down. You actually get an arrow. See how accurate these are? Every one was correct. Every one. Based on how you read level 2. Guys, it's a phenomenal indicator. If you stuck around to the end, I hope you did. And now it's breaking up. Now, it told you to do it, and it went all the way back up from where it was. And the arrow told you to do it. And I don't know, I wasn't watching over here, but you're just trying to catch 2 cents, 4 cents, maybe 10 cents if you're really lucky because you're trading 1,000 shares or 2,000 shares. You're trading. That's 5,400 shares right there. See how that's building up? So in the volume, it just flipped over. So let's see if the volume. Wow, look at the volume there. This is about to pop, guys. If this goes above that on a upward thing here, this is going to really pop. So a lot of traders would just get in now and wait, just be prepared for it to go up. So let's see what happens. I mean, it's not giving us the signal yet, but some traders aren't waiting. They're anticipating that this is what's going to happen because the volume doesn't necessarily need to break it for it to go up. But now it really died off there. So that's why you don't want to jump in because it didn't tell you that it was absorbing. It's just staying here and not doing anything. So that's the difference between a good level 2 reader and a bad level 2 reader. A lot of people would have jumped in and they would have been wrong. And now what happens now? So nothing. They're sitting there and maybe they're in that position and it's about to go down, or maybe they're going to get lucky and it's about to go back up. So let's see if we can get another reading for this mic'd up video for you guys. I have other stuff going on here. This is the breadth of the whole market here. You might want to get that indicator because that's showing you what the SPY, the QQQ, and then the bonds, and then the fear indicator are at any given moment on this time increment chart. This is a 5-minute, and I have it down here on a 15-minute too, so you can see. This helps you if you're trading margin. I mean, this is a prop firm layout, but I took a couple of things off here so you could better see this work because you can get overwhelmed with too many indicators. So absorbing going down, get ready. See what's going to happen here. Hasn't told you yet, but if you look over here, see where most of the shares are, so you can decide which way to go. Yeah, it dropped off, so not too bad. Yeah, it started to show you something right as the candle switched, so we lost that. It's kind of a waiting game, but trust me, if this was nearer to the opening of the market, the information is it's like flawless to help you go in and out. Obviously it's better to know level 2. It's obviously better to understand it, but this is why we call it level 2 on training wheels for the prop firms. So they get their traders, sitting down to trade and they say, watch this indicator. See, you don't have to know. See when it's absorbing, see the direction it's about to pop, and get ready to go. Get ready to go. And then before you know it, you don't need to see the indicator because you're looking over here and you've learned how to get it. It's just practice. And that was the whole idea, is have something that's practice. For a lot of people like to trade on think or swim, even though it's not as fast as some of the direct access that charge you money. You can still make really good money. And I haven't developed an indicator like this for some of the direct access. And I think that this should really help you guys if you're into this. But again, trade in a simulator, practice. Keep your share size low until you're green, and speak to a financial advisor who will tell you, do not day trade. That's what they'll tell you. So that's a breakdown. It called it. There it goes. Bam. It broke the volume, broke the last one, and then it broke down, and you had another chance. See, it calls it perfectly, guys. So it's pretty flawless. The only thing you might get bored because it pops and then nothing, it just stays at absorbing and nothing ever breaks down. So yeah, that'll happen because it's not going to move every single time, but it is going to alert you. So now the one that I showed a couple weeks ago didn't work the same way this works. I wasn't using the same data points, and I tweaked it and with my team. And now we're all so excited about it. I mean, most of us know how to do level 2, but I mean, we wished we would have had something like this way back when we're just like, I just don't get it, and trying to pull your hair out like, how did they know to do that over there in that other trading platform? How does he always know to go in? How come he just made $10,000 and I lost 1,000? So, this is going to train you to trade along with those high rollers, So guys, that's something hopefully you're going to pick this up. So it's down under the show more information for at least 48 hours. And then you'd have to go to the $1 Million Margin Club. So I thought I'd clarify, but Alan mentioned that I did not clarify something about this here. So I want to come back to it for a second here. And I'm trading in a studio with a lot of traders that trade upstairs and downstairs. And normally Charlie will be over here. She handles the chat when we are trading in our large group, and I'm quarterbacking. So you understand the layout if you've never been here before. So what I didn't mention here is when these are accumulating up here. If you see the absorbing going off, like in this case, it's on the ask. So if you see these wind down as it's absorbing, that means the price of the stock's going to go up. Okay? And there it goes. They absorbed and the price went up. Break up. See how perfect that called it? You saw them. It said absorbing, and then it said breakup. You could have caught that move, which was, I really wasn't watching exactly what it was, but it was like 5 to 6 cents. Boom. It told you. Guys, that's how great it is. And if it's on the bid and it's absorbing, then it's going to go down, because then you have to have a lower price to be picked up as those get eaten up. You have to have a higher price to get picked up when these are, eaten up. So the price goes up. So, again, and you get alerts too. You get, this just has, that was another, that bell was from another indicator that's on here. And just to show you how, besides how dynamic this is, I always say trade with the crowd. So every one of these vertical lines are set exactly 5 minutes apart, because a lot of people trade on a 5-minute chart. And that's part of this indicator. I've just split it up so that the labels wouldn't be in the way up here. That shows you the direction in the 30-minute, the 15-minute, the 1 hour, the 4-hour candle, trading with the crowd. The other thing you will see here are these half and whole dollar lines. A lot of people go in at half and whole dollars, and that is very, very respected. Not so much on a micro cap because you're barely moving, but it might hit a hard floor there. When you're trading strategies like the RV strategy, you're trading in channels, much like half and whole dollar. And you'll bounce off the channels. So you mark those channels with historical data. It's probably a good time to tell you about how to trade just generally is based on historical data or indicator-driven trading, which is both the ways we trade here. So when somebody tells you that you don't need to put a line on a chart, you don't need to study a chart, well, run, because it's the only way we know any kind of data is from the past. Then how do we pick up that information? There's only a couple of ways. There's indicators that will give you crossover levels where information is crossing over, telling you, hey, it's going in a certain direction because this level crossed that level, and that's what always happened in the past. That's what we look for. What happened in the past? Or you mark the levels where there was an abrupt turnaround. You're going to mark it on an abrupt turnaround, and you go back in time and you check where the candlestick went up, stopped dead, and then went down, and you draw a line there. You make a horizontal line to go like, let's keep an eye on that level. How many times did it stop and turn around right there? That seems to be a very respected level, right? And it's just common sense, guys. Now, a lot of people can just remember it. That's fine. And the even and whole dollar lines don't hurt. But you have historical data, and then you have indicators. And really, if you're serious about it, you're going to learn how to do historical data, and you're going to have the right indicators on your chart. And really, the way indicators have improved just in the last few years is literally, it's just amazing. Like this MACD here, Let's go to look at this MACD one just for a second, guys. So, MACD directional surge. I think it's this one. Let me add that. Just want to make sure it's not on the light. Nope, that's not on the light. So apply. It's going to make a big mess here. Oops. And then I will zoom in down here on the Pro Scalper because it's just easier. We'll put this up. And let's take a look at how accurate the surge is here. So the surge are the white arrows, and you get the MACD, and you get alarms that tell you. Okay? So this one said that was going to go up. It went up. I mean, this is a really bad stock to put because the moves are so tiny that the MACD has a terrible time. But for the most part, it was accurate. Going down, went down, right? So going up, went up. So just one more thing to make your trading. Look, there's another breakout on the level 2. This indicator, guys, pick it up. It's free. Get it. Put it in your chart if you're going to do micro cap or even small caps. It's just amazing. But watch that video. I'll have a link to it that has explanations for all the more modern indicators other than the Scalp Pro, which has its own video more just after that because I gave that away for free, I believe, on the Scalp Pro. So, but anyway, guys, listen, be careful out there. Thanks for watching. Hopefully you understand level 2 now a little bit better than you did before you started watching this video. I always say to everybody and all the people watch and the students, stay inquisitive and go green out there, guys. Thanks for watching.